Can you hear me now? I can't. All right, say hi to Cheryl. Say hi to Cheryl.
Hi, Cheryl.
Okay, Kwame, we're going to share your, do you have PowerPoint?
Yes, I have. Let me
Okay.
log in.
You,
Can I log in?
I
Because I have it in my account.
Okay,
Just open up, you can open up a new.
another
And
one?
download it.
and
Good,
you have-
I'll let you guys take
Yeah,
care of that,
okay.
thanks.
So open up one. Like it's in your Google Drive
It's on my. I'll have to download it. Literally, I send it as an email.
as an email.
Like,
So you
yeah.
No, I mean, the fall. But I may not go to, that's all we're doing. I may not go to, private services, like, you know, fall. I'm just doing all of
That's it, as long as you
Stop.
All right.
Yeah. I'd say. Well, let's email them back and say, paper and. It's a great time for John, email them back and say.
All right, everybody, we're going to get started in a couple of minutes, but in the meantime, if you haven't already signed in, sign in. Take a survey and a flyer for next week's seminar, which is going to be Tarek Jaziri. As you know, this semester we have an all-alumni seminar series. So we have 9 alumni who have volunteered very generously to come back and talk about where they are now. In some cases, they'll talk a little bit about how they got from university to where they are. In some cases, they'll talk about how they're using energy in their current line of employment. So this is going to be an exciting semester, and if you're on my sign-in sheet, then you'll be getting a lovely reminder email from me for next week. So definitely make sure that you sign in. Also, it helps me to keep a head count, and it helps us to gain support for the program. So thank you for doing that. The survey is something that we're also using to help make sure that the quality of our programming is what you want to see. So there's going to be questions on there about the presentation that you saw, about the presenter, about what you liked and what you'd like to see. So if there are other seminars, other topics that you'd like us to bring to you, fill out that survey. That, you know, it helps us gain support for the program, it helps us gain support for the seminar series, and it helps us to bring you a program that is something that you're looking for.
And
So
pause.
here we are.
Yeah, that's it. Okay. Now, we go back to here, widescreen, and we're going to share screen. Let's see, how do we do it?
Share screen here.
Yeah.
Okay. So which one is this one?
Is that it? Good. Yes.
Right?
Good. All right, you can make it close.
Yeah. let me do this one.
Right, should I go usually up to interview just to introduce you? You ready? Okay. All right.
So we're going to go ahead and get started, and I would like to introduce Yu-Men, who is one of our ESE students. And another thing that we're doing this semester is networking each one of our students to each one of the alumni so that they get a chance to meet the speaker, make a networking connection, and do some professional development exercises and learn how to give introductions. So, Yu-Men.
Hello, everyone. Kwami is a 2014 Lehigh Energy System Engineering Institute graduate and has successfully defended his PhD dissertation in an electrical engineering program at Lehigh University. Today, he will introduce the opportunities and challenges of blockchain technology in energy trading. Then, please welcome Kwami to start his presentation. Thank you.
Hi, everyone. Thank you to be here, regardless of your schedules. I know this is a little late. Last semester, I think we used to do it a little bit earlier, 1 p.m. But to start, Yushi presented me as an alumni from this program. That is true. I graduated in 2014. And as he said, I just defended my PhD. And my research is on renewable integration in general. But tonight I'm going to talk about something that I cannot claim to be an expert on, blockchain technologies. I encounter blockchains just as maybe some of you through curiosity, and I read news about technology, so that's how I got in touch with blockchain. So it's not something that you would expect me to be, really deep on, but I will be happy to discuss any questions you may have. And this presentation is going to be quite short, as you can see, about 18 slides. So that leaves us plenty of time to discuss some of the worries you might have as you hear about this blockchain technology in the energy trading. Without further ado, we'll say that blockchain technology is something that's fairly new, especially in the energy industry. It's been started with, I'm pretty sure that a lot of us here heard the first time blockchain through something called Bitcoin. At least on my side, that was the case. So I was reading something and they were talking about Bitcoin. I was like, wow, what's this and what's the theory behind this? So I came across a paper that was basically the first one by, I think it's Satoshi, who wrote about this peer-to-peer trading, platforms and technology, and basically that was the first work on blockchains. So I'll be happy tonight to talk about some of the things that we can look forward to as this technology grows and applied to different sectors of the economy. So we'll go through, and one of the things that's surprising is that this is not, as I said, it's new, so it's not very known in different industries. There were a couple surveys, a survey conducted by German energy agency, where they came up with 13%, only 13% of the respondents who were aware of blockchain technology, who are actually part of the energy industry. They're decision makers, and only 13% of those who were aware of that technology had some plans to respond to the trend blockchain is having in the global economy. And not to mention that only 31% of those decision makers were aware of, they had not only, so only 69% of those were actually aware of the technology being there, whether vaguely or specifically applied to the energy or other sectors. So this raised an important question. Is there anything that the energy industry can gain from blockchain technology in general? Well, we cannot say yes, we cannot say no. But the truth is that blockchain technology is growing, and we've seen the proof in other areas of the economy, like finance. So what is in blue is basically something I was thinking, it's a thought that I came up with, because I thought tomorrow, if we are to be the leaders of this economy or this industry, we have to take chance to understand anything that can help the economy or the industry grow or make it more flexible. And that should be the challenge of each and every one of the ESEI students who are in the room today, to take advantage of anything that can help things like machine learning, things like blockchain, and all those are probably going to be game changers or players in the energy industry in the future. So we just want to be curious about them and learn as much as we can and see how we can apply them in the future. So this is the overview, the points we're going to cover today. The technology, what it is, how it works, and some other categories that we can have when we read papers. And we're also going to talk about the transformations that need we will need in the market, or when we transition from the current way we trade energy to when we potentially apply blockchain, what we should expect to see. And we'll talk about a use case, which is the Brooklyn microgrid. And we'll finish with some benefit and challenge analysis. So what is a blockchain? For most of us who have heard about this technology, two things will stand out. They will mostly talk about peer-to-peer transactions. They'll talk about having a system free of brokers or middlemen or third parties. So here on the left, we have the traditional transaction model, which is basically a stock model with Centroid being the third party, which is connecting buyers and sellers. But in the blockchain technology, the vision is to be able to connect directly buyers and sellers, or consumers and producers, in a peer-to-peer way. So transactions are direct, decentralized, and the B here represent blockchain. So all of them are connected to the blockchain on a blockchain platform, and SC stands for smart contract. So the technology assumes that there should be ways to do things automatically without requiring someone to be in front of a computer. And each of the nodes here can represent computers that will compute based on the protocols that are established in the technology and the rules that are defined in a particular market or industry. And the smart contract would be basically rules that are executed automatically based on triggering events. So for example, if we take this to the energy market, well, we can talk about, well, what if I'm selling energy to someone and he's not able to pay for 2 months? What do I do? So we can all agree on the rule, the contract, the terms of the contract, and say, if you don't pay for 2 months, then I'm cutting your power. And we write that in the code, in the program that's run on the blockchain. So whenever someone who is using electricity for 2 months, for example, but is not able to pay, then that will just execute automatically. Those are, that for example, is an example of smart contract that doesn't need someone to be there and take an action or make a decision on that. It is agreed on. So there are two definitions here from two different sources, but we can see that they all are in harmony, especially when it comes to the term peer-to-peer transaction. Now, how does it work? This can be complex, really technically complex. So I just try to put some bullet points to explain provide a high-level explanation of the ins and outs of the system. Here, let's assume that we have someone who is buying and someone who is selling. So the transaction is between the two, and they connect through the entire network, which is peer-to-peer. They connect through that network and agree on the transaction in terms of size, in terms of price, and what it means to deliver the good. They come up to an agreement, and they make the decision to follow up to continue the transaction. Now, that each transaction has to be signed, and all that involve having keys, like public keys and private keys. Private keys can help sign, public keys can help identify who is the owner of that transaction, and all that. And there are more technical details on that side, and the algorithm that are actually used to verify whether the transaction is legit or not. Now, the transaction is encrypted. and distributed to many individual computers. So every single the computer in the system, every single node would have that information, the information about the transaction. And one of the beauty of blockchain is that you have all these different nodes, they have the same information. They maintain the same ledger or register of transactions. And so if a node is corrupt, there's still hope that the information is available somewhere else. So that's the decentralization. That's one of the beauty of the system. So that's why each single transaction has to be sent to all the nodes in the system. And all transactions are packed into what is called block. That's where we have the name blockchain coming from. So we form a block of transactions that are verified, that are considered legit. And those block, there is a process to define the block. Since every node in the system is computing, is forming these blocks, there has to be one that is accepted by all by consensus to be the next block to be placed on the chain. And there is a consensus algorithm that helps come to detect or to decide which node in the system has successfully formed that block to be placed on the chain. And it's a competition, and there are some rewards for that, for being able to come up with the next block to be placed on the chain. The nodes or the set of nodes that successful compute or solve that mathematical problem will gain a reward, and that's what's called the mining. So that computation will help them have the reward. And this reward can be, for example, in the case of cryptocurrencies like Bitcoin, Ethereum, and other ones, the reward is expressed in the currency of that blockchain. Now, once that block is accepted by all as the one to be placed on the chain, it's placed on the chain alongside the other ones that were on the chain before. So we will continue building on that chain as we move forward with transactions. And coming up with this block, compacting set of transactions into block, all that until placing it on the chain take about 10 minutes. So this is basically the time to clear the entire process for a given transaction. And once that block is placed, is verified, legit, and placed on the chain, the transaction, both those who are entered into those transactions that have been placed on the block, they receive the notification of a successful transaction. So if it's a good that was sold, that will mean that then you have the okay to send the actual good to the person. Transaction is cleared. There are different development stages of blockchain: blockchain 1.0, blockchain 2.0, and blockchain 3.0. The first, the basic one, the one that's well known, Bitcoin has been there for, I think, 7 years now. So there are some proof about that. We have experience about that. So here, those are the blockchain 1.0 concern the cryptocurrency applications of the blockchain. And the blockchain 2.0 concern the applications for smart contracts. And as I explained before, smart contracts are the ones that are implemented or activated based on pre-established rules by both parties in the transaction. Blockchain 3.0 has not been implemented yet in any project. These are, the vision for this is to be able to have a system that is completely decentralized, it is autonomous, for example, part of a grid that can run its own transactions on that part separately from the grid without taking into account anything that, so basically completely centralized and decentralized and autonomous. And all these blockchain stages, development stages or categories can fall under two or three. There are some development right now about something that can be not completely private, a little bit private, a little bit public. But the two like black and white categories that we can talk about are the private and public. Public, everyone can read, everyone can write. Private, it's just a set of people that are able to write, not everyone. The other players can only read. And these are because of some security risks, some security concerns, and who is able to, depending on the business model and the industry, who is allowed to write, who is allowed to read, and all of those. And as we move forward in the growth of blockchain technology, we'll see more and more, maybe more soft systems and categories, security ones that we can envision in the future, especially when it comes to energy, because our business is a little bit different. So what are some of the, what is the induced transformation that we'll have in the energy sector in terms of market structure or the way energy is bought and delivered today? I found this interesting in PwC document, a paper that was published. It's available online, and I think that's one of the most complete papers on this topic. The transformation of the market will look something like this. On the left, we have what is currently used, the traditional process. We have all the generators, we have the consumers and the middlemen like bank. You pay both buyer and seller, they have an account in a bank. And so if you want to pay, you basically deposit the money on you too have your account on a bank. So you basically transfer to the bank and they trade later, and whatever however they do to get their money, they will do that. So the idea of removing the middleman or the third party is basically the central idea here in the blockchain technology. So we can see on the right, there is no middleman. We've got rid of the banks, we've got rid of the meter operators. And here, all the producers are connected to the consumers through the grid, electric grid. That is actually the physical infrastructure that will deliver the power, the energy needed. And the blockchain is mostly used here for data and payment, and because we cannot expect the blockchain to deliver the power. That would be catastrophic. So we send power through the computers. That would be just unacceptable at this point. Yeah.
How is that communication executed? Through power lines themselves, or would you, when you enter this network as a customer, would you need some sort of Wi-Fi connection on it? How does the actual trading of how does the trading platform interact?
It uses internet, yes. So yes, data is transmitted through the computers, and energy itself, it's delivered through the actual power lines and towers that we have. So that's, yes.
If you consider that a permission blockchain on the right, then who would have those permissions to read and write those transactions? Would that just be the network operators, or how would that play?
That's an interesting question. That's one of the things. So right now, there is no great scale blockchain application. And those are the security questions, the security risks are the ones that need attention at this point to be able to take it from where we are right now to maybe a grid level transaction system.
Right.
Yeah.
It's stated to be a security measure with shared
Yes.
authority or security rights or security.
Yes.
Yeah, I was kind of wondering about 61% of that, because there's a possibility China takes over Bitcoin right now.
Yeah, and one of, as you'll see, one of the challenges right now is that, well, what if someone has some weird ideas of attacking the grid? They can, if he has access to the data, to the entire data of the system, and as blockchain is saying, as the protocol itself, the technology itself is promising, that would be a problem, right? So apply to other industries like Bitcoin and Ethereum. They've been stable so far. I mean, Bitcoin has had success so far, but there was an incident with Ethereum, I think, in 2016 when one guy was able to take a bunch, and so there are some risks, and all that, especially in the energy industry, all that has to be studied, and we make sure that we can get over those things before actual implementation, grid scale implementation. So we still have a way to go. But basically, that's the concept behind the blockchain technology and how possibly we can use it. Here, a lot of questions on the right. Who has access to what information? How is it encrypted? And what's the regulation behind that? For now, no one has the right.
Question. So with Bitcoin, you have the concept of proof of work. How does that work in the model on the right? Is it still proof of work? Would you be using currency of some form to do that trading, or does it have some other mechanism like proof of work?
Yeah, it would be. I would think from what I've read so far, there's going to be a possibility to have a currency for that. And so the computers, the supercomputers that are forming the nodes, establishing those blocks need to be rewarded, and there will be proof of work or proof of stake, depending on what model the industry chooses in the future, or maybe something else.
So will there be any kind of a reasonable size of that system where the one blockchain is used, or could be multiple of blockchain systems? My question is, okay, taking an example of United States.
Yes.
So could it be just one blockchain system or many blockchain system integration? Which would be more plausible?
Well, that's a difficult question because if the United States has to adopt as a country just one blockchain, I would think probably this development will start from regionally. Yeah, because it's going to be a lot of policy issues, a lot of we have different markets right now in the US. We have different markets, I think at least 10 of those markets.
You know, in this country, there are 8 to 9, ISO, independent system operator, which has same grid. So the possibility that it will be divided by the grid, interconnected grid, or by something else. Right?
I would think it would be easier to start with those existing structures because the decisions to make would depend on those market operators, and so it's not something that we can say we want to start just globally, just one in the United States, and even finer, like with subsets that are even smaller than regional markets, And there are some, as we'll see in the end, probably the Brooklyn Microgrid project. It's just 10 homes. It's a demonstration project study to test and see what we can learn from that.
Where is it located?
Brooklyn.
Where is it located?
Brooklyn. I don't have the exact address, but it's in Brooklyn. Yeah, New York. So here are some of the things that people are thinking about with the decentralized energy transaction and supply. We'll probably have some more features like manual or automated consumer producer transactions, have payments using cryptocurrencies, like question that was raised before, and all that has to be designed and decided. Distributed tamper-proof record, that's something that blockchain offers. You cannot change the information once it's stored, so that's a solid argument that can be used to promote blockchain in energy industry. We'll probably balance supply and demand via the smart contract that, you know, we want supply to be equal demand. We don't know right now exactly how that's going to be implemented as a code, but that definitely has to be done. That's part of the laws of the energy industry. And all these will require to have smart meters. We'll need to have sensors. We'll need to talk to appliances and say, well, I want to schedule you for this at this time, and smartphone applications to be able to control, if it's not automatic, to control the appliances based on the prices. For example, I'm connected to a blockchain and I see there is a low price in this, there's a potential for low price in this time. I might schedule from my phone, using my phone, schedule my dishwasher or my dryer for that particular time. So all these would help the concept of smart grid in the end, because we want the load to be able to follow the supply in a smart way. So if it's made more flexible, we can use our phone to control our appliances, take advantage of low prices. Since all the transactions are going to be open and probably transparent to anyone, we would anticipate low transaction costs, and maybe energy price will end up falling because we'll remove a lot of middlemen.
Maybe you said this before I came in, so I apologize. The question I have is regarding blockchains. What intrinsically makes it such that once you write something into the blockchain, into the network of ledgers, then you cannot change it? What blocks or prevents any changes from happening?
Okay, yeah, thank you for the question. The technology behind, so each transaction is hashed. And if you change something in the transaction, it's no longer the same transaction. So it will be rejected if you try to change a transaction, because it's encrypted. So the message that's sent is not something that you can understand. It's a sequence of numbers and letters, and you don't know actually what's inside as it's.
The second to last block can be gone over, and once the block is written and then distributed across the network, once you have 51% consensus, it's incredibly difficult without like a Google squared amount of computation power to go in and even change the last block.
Because of all the encryption?
Yes.
You would have to somehow push the data out to more than 51% of all computers that have the information on them. It could be done. That's why I was kind of wondering about, it's probably going to have to be proof of stake that proof of work. And even if you have a readable, like it's just a linked list.
And that would mean that you own basically 51% of the computers on the network.
If you
To
can
be able-
write, if you can write.
To be able to do
If
that.
it's not right,
To-
then it's not such a big concern unless you kind of work your way in, which of course has happened.
Well, that's why I asked the question, what intrinsically makes it such that, from what I think I'm understanding, it's hacked from.
So for example, if you change, assume that you change something in the transaction, that you submit it and just change something in the transaction, for all the computers to agree that, oh, that's the new block to be put on the block, on the chain, you have to have at least 51% of the computers on the site that said, well, that's the one. We agreed on that. So that will reject the other one because it will place it on the longest chain, the longest part of the chain.
Okay, basically, there's no brute force way to override something.
There is a brute force override.
But since it's distributed ledger, so everyone has the information. So let's say 90% of the computers have the same ledger, and you're the only one who had something different. No one is going to take. That's never going to be the next block. That's basically.
Well, once you do the transaction, right, the initial transaction, that's what gets sent out to all the computers. It gets hashed and everything else. That's done.
Yes.
You can't change that ever. If you try to do something different, you're actually creating a new transaction, right?
Yes.
I think that's basically what's happening. I understand.
So for you, there is the process is once we go into the details, the process is because you can drop a block that is prepared can be dropped. So assuming that you write that first transaction, it's packed into a block, you can automatically write another transaction. And if you can make that block, if you can drop that block, the first block, then you succeed. And to be able to do that, you have to have about 51% of the computation power.
In today's Internet of Things, we have these smart lamps, right, that are made independent of, let's say, something like Alexa, right? But through APIs, they can interact with each other to create smart appliances. Do you see at the start of this type of implementation of the blockchain, all of those hardware, software, APIs, and the blockchain being made by one company, or do you see independent hardware companies, software companies, blockchain consultant coming in and then just using the APIs to kind of?
I think the second option would probably be the one that would succeed in the future because it's just difficult to have one company, have that kind of business model. And actually, in the Brooklyn project, the Microgrid project there, I think they're using Raspberry Pi, for example. So that's basically the smart device that's controlling the load, and deciding when to buy, when to sell. Yes.
Sorry, I know you're like trying to get through your presentation. Just real quick. This might come from like a flaw of my understanding of the technology, but if you limit the ability to write to only one organization, doesn't that negate the advantage you get by having a decentralized ledger if you're pinpointing only one place on the ledger that is allowed to write?
That's true.
Is that a security concern?
That's true. Yes, that's true.
Well, it depends, I guess, because when you're talking about cryptocurrencies, you're talking about a totally decentralized way of doing currency, for example. There's no centralized, like, government agency controlling the currency. But when you get to other things like the next step, like Ethereum, you might have a crypto contract or something where it would be controlled by one agency, basically, right? Like a contract, for example.
So the contracts are just like written code. So when I write a smart contract for the Ethereum network, I have no control of the contract. It's just on the network. So the network owns the contract entirely. So the Ethereum network, there's no type of centralized authority.
Okay. Well,
So yeah, it's just a set of rules that are written, like both parties are agreed on, and it's written as a code that's executed automatically once the event that triggers that contract happens. Yes.
What do you say with respect to the transaction time from start to finish? Obviously, we've been getting in the news that the transaction time is pretty steep, right, for mine or whatever that is. So how would you see that having an impact on transactions here within the energy, like if you're trying to turn on the pool pump, for instance, right? If you're going to use this blockchain, can we guarantee that it's going to be executed in the time that I specify it if this were to happen?
Yeah, I think at this point, once the block is verified and confirmed, the transaction has happened. I mean, it's certified. Actually, it's happened. It's confirmed. So these, as I said, it's somewhere around 10 minutes to be able to do that. But if you take, for example, banks now, it might not be immediate. It might not be less than 10 minutes to confirm the transaction. So it would depend on the size, as you said. It would depend on the size of the system and all that. And again, it's at the development stage, and it's hard to have a strong answer about what the transaction time will look like in the future.
I'm gonna ask that you just kind of go ahead and do the rest of your slides and save the questions for the end. That way you can get through your presentation.
Sorry.
It's okay. So here's the project I was talking about. It's as you can see, we don't have the pointer. Okay. So as you can see here, it's 5 houses here. One side supposed to have solar, and the other side. So they basically decide. The objective of the test is to test the use of blockchain in the energy transaction, and see if it's going to be viable to create a local energy market per se, a neighborhood energy market. I produce energy. I have surplus. You need energy, so I sell to you, and things of that nature. So right now, there's no strong results that came out of that project yet, but we're looking forward to see more and more and learn from that and see how we can expand projects like it, multiply them, and have more insight from the use of blockchain in the energy industry, because we cannot just start by using it in a large scale system because of the risks that we might encounter.
So are you part of the team?
No, I'm not.
Oh.
I'm just a reader. Some of the benefits that people point out in the literature and online is that it's efficient, since it's peer-to-peer. There's no middleman. There is a transparency, and this will probably cause falling of the prices. Low transaction costs, or said things that people were saying to promote the blockchain technology in the energy sector. Greater flexibility. You can change supplier. You don't have a contract with a given supplier. You can buy today on the market from this other supplier. And this also can strengthen the role of prosumers, people who have generation assets on their premises. They can easily sell their surplus and buy as needed. There are some challenges, as we're talking about them earlier, security issues and things that can make the grid more vulnerable to attacks. So here, it's a pretty young technology, especially its application in the energy sector. There is no grid scale application. So we'll need to sit down and study that for the next few years, and we will rely on you, the ESEI students, to be interested in things like that and come up with solutions that the industry can use. We'll also have to sit down and talk about regulatory requirements for the grid, because this is all nice, but once we enter into the actual business, for example, if you lose data, if you lose your ID in the blockchain platform, it's not recoverable. So you lose your data, you lose everything. And if there is a conflict, who is going to solve that? Since there is no manager per se for the system, it's completely decentralized. Or do we want to come up with a different model, you know, something blockchain, but that has a certain level of control dedicated to someone or an entity? Well, it's going to be a trade-off. How much freedom or how much decentralized we want the grid to be, the transaction to be. And if we want too much, then if there is a conflict, there's no way we're going to solve that. Because currently in the blockchain technology, when there is a conflict, conflicts are settled by the majority of the nodes, which are computers, majority of the players, the participants. So how legal battles and all that, how is that going to play out when we decide we want to use the current configuration in the energy trading? So those are open questions. Anyone who has answers, technology answers, design, modeling answers to make the blockchain more appropriate to the energy sector, that will be great to hear. But till then, it's a question. So, and here, if there are risks like that, if there's conflict, there is no one to report the conflict to talk to, people might not accept the concept of blockchain and energy market. These are some of the papers. The first one is the Nakamoto one, basically the very first paper in this technology. It's worth reading. So with that, what can we take away from this presentation? We've seen that it's great, it's decentralized, it offers freedom, it offers transparency, but how well can we use it to better our system, our energy industry, our energy transactions? Now, there are some challenges, risk, security problems that need to be addressed, conflict resolution, and things like that. So those are the open questions, and we'll keep, I think, the industry, one of the things that's important is to be aware of this technology and think of it, study it, and see what else we can do if we are to use it in our transactions. That'll be all for tonight. Thank you so much, and I look forward to your questions, other questions that you would like to ask.
We'll take questions until about 6:30, but also we would like to thank you very much for coming, and we would like to present you with a special acknowledgement of coming back to present with Energy Systems. So on behalf of Energy Systems Engineering,
thank you for joining us today. On behalf of the Lehigh ESEI program and all of us here today, I'd like to present this gift to you as a token of our appreciation.
Thank you so much. Thank you. Thank you.
Filling out the surveys while you're doing question and answer. I'll be collecting them at the end. And first question.
Are those slides to be available?
Yes, I'm going to post it to our website. Also, what I did was I recorded this simultaneously as a webinar for 1 or 2 alumni who wanted to join us remotely. And I do believe I clicked the record button. If all goes well, then tomorrow I'm going to link it right to our website.
You get the slides also.
It will be just the slide.
Just a slide, okay, yeah.
Yeah.
Thank you.
I definitely see the benefits for the individual consumer, and I see the benefits for a house that might be producing excess energy using solar power, connecting with another house in the neighborhood. What are the potential benefits for a traditional power producer, like say, gas company, somebody that's using gas to produce electricity? What's the benefit for somebody like them? Or is the idea that this is really only applicable to alternative energies, or are we eventually going to?
Yeah, that's a great question. Currently, what I can see is that because it's at this point difficult to apply at the grid scale, at the grid level, it's being more targeted to renewables, power exchange, and local community type grids. But one of the things that a gas company or a conventional generation company might gain from the blockchain application would be data storage, because it's decentralized. They can rely on other nodes to still keep their data, and data can actually be stored once those chains are formed up to a certain point, can be stored outside, basically out on cloud or somewhere if they feel safe doing that. That's a possibility. And also we talk about that. Oh, you want to add something?
You can run a Bitcoin node yourself now. It's like 200 megabytes or whatever. So you probably have to get a little bit of a license or something, depending on if it's a privately network. But in the sense that you can run a IOTA node or a Bitcoin node or Ethereum node, have your own solar panels, and in your state you're allowed to net meter, which is the self-grid. And there's no reason, in my mind, why you couldn't also. You would have to have your own node basically if you're producing energy. So I don't see a reason why I couldn't be that there.
And also in the slide we talked about transaction costs being reduced, so that's a potential benefit for conventional plant as well.
So in the routine example that you were talking about, they're injecting into the Conedis network, and then they're starting from Conedis, or do they have like some dedicated infrastructure?
Yeah, it's a bus. It's a bus that's linking 5 homes here and 5 homes on the side. Yeah, so they're not injecting in there, but it's basically local, just those 10 homes. Yes.
With the electric grid, at least around here, a lot of this is based on market forces and kind of an auction type of approach, where people are bidding in and prices are set. Have you seen any research around how blockchain can be used in that type of auction setting or kind of a dynamic price setting model?
No, not specifically on the market model of blockchain. But one of the sources that I used, they said that the prices would be set to the market, so balancing market, and we definitely need all that to be able to make sure that we have the energy available for the consumers. So I would think all that needs to be discussed. Right? What's the market? What's the code for the market will look like in blockchain? That definitely needs to be addressed as well. It's going to be a programming, thing, but it's how. I haven't seen anything done already in that area, but it's possible because any command you can give a man, or anything man can do these days, we can try to write a code that can do the same, similar thing, or at least if there is a need for an agent to intervene at some point of the process, that definitely is possible.
Does the use of blockchain technology eliminate the need? I know you said it eliminated the need for meter readers, but does it also eliminate the need for meters at all? Like, how does because I know there are already smart meters that can communicate with the utility and the ISOs regarding consumption and other, useful data like that. So how does blockchain preclude the use of meters, or does it?
It doesn't preclude the use of meters. It uses smart meters. Smart meters are basically connected to the computer system, and so data is injected, read, and injected.
Okay.
Yeah, depending on.
Well, the meter readers, they got rid of the meter readers when they don't.
Yeah, exactly.
There's no more meters, you know.
I think I was just confused over the orientation of the diagrams, and that's why I asked.
There's still going to be meters, but smart meters.
How do you change the rules of smart contracts if you have a 500,000 minimum? So say some point down the road, like this is a fantastic idea, you have a half a million people sign on to it. Now you're like, well, it's 2 months, turning off electricity every 2 months. We're going to go to 3 months. How would you change that? You have to, all a million people have to change that rule? Or is it, once you put these rules in place, they can't be changed?
Normally for public blockchains, the rules have to be made in consensus based. So yes, that would be the case in a public blockchain where everyone has to do the rules or download. It can be done as an update to the underlying software, like the underlying protocol, but it will require, given that it's a public blockchain, will require that everyone understands it.
Agreed.
Yeah.
Would it be like effectively everybody who's on the contract now is grandfathered on? They all have to get new contracts, probably, new transactions.
Yes.
Good to get through the contract. That's what it would seem like to me.
Yeah.
We don't know what the technology is going to be like, but
Yeah.
best guess,
Yeah.
like everybody's grandfathered in.
Or it would be like your credit card company sending you, oh yeah, we're changing it.
Currently
And we-
designed, once you're on blockchain, you're on there forever. People are getting nailed now for illegal transactions they did 10 years ago involving drugs or weapons.
Yeah, because the data is there.
Yeah.
So where are you running? What are you doing? You can't run. Data is there.
That's not why I wanted to narrow.
Data is there.
Well, I was going to ask this as a facetious question, but it's still facetious, but maybe serious. How can blockchains be used to stabilize the stock market?
I have no idea. I have no idea. And I believe stock market is going to be stock market function.
You believe what?
Stock market is still going to be stock market. Like, it's going up and down. I don't know if blockchain can change it, but maybe transparency and more transparency before we to reduce volatility.
I know this will be kind of a far out question, but when you had that list of the smart meters and some of that other hardware in place, that implies, we already had kind of a further along society than we look at. What do you see as a realistic time frame for even, I know I didn't know much about the Brooklyn project before tonight, but what do you see as a realistic time frame to actually have, an implemented blockchain that can really make an impact on the energy sector?
Well, I'm very optimistic, but I would think 2030 would be a good time to start seeing some meaningful results.
And how much cooperation do you see happening between the public and private sector in order for that to happen? And which do you think will be the primary driver?
I think private sector will be the driver, because one thing that maybe you always know is that public sector tends to be slow, like it's really regulated, and so private sector driven by gain and profit will probably take more risks, take chances to try new things and prove that it's working. That's going to be something that's to sell. So I would see private sector driving this initiative.
we'll do one more question.
So actually, thank you for your information regarding the Brooklyn microgrid. I'm going to dig up some more information over the internet. Is it on the domain?
It is, yes.
Okay. So besides that, what have you thought about the cryptocurrency application into energy, your own? Did you have any other ideas?
There are things like solar coin. I wanted to mention it, but at the end I felt like I don't want to put too much information. There's something called solar coin. That's mined actually by generating solar energy. There's a solar charge project. So there's a potential for using a given currency. It can be existing one or a new one that's mined differently, that's totally processed a little differently based on the requirements of the energy market. But yes, there is possibility to create. There's something called Enercoin as well in Europe. So there are some projects, there are some cryptocurrency projects with regard to energy that can be used to purchase and sell energy.
So how about ancillary service like a frequency regulation in this PJM area? Have you thought about it as a candidate?
So right now I'm thinking of two things. The first one is the transactions happening on blockchain, but then the delivery, the market itself, the different markets will still keep them the way they are right now. So for example, day-ahead market, real-time market, ancillary service will still have, because those are basically solutions to reliability. You have day-ahead, you commit units, and then in real time you find energy to trade the mismatches and frequency control, ancillary service, and all that. For the energy industry, we still need that concept. Now, how do we implement those markets using blockchain technology? That's still a question. The how is still a question, but those solutions, I think.
It's not really a question, but Goldman Sachs has an excellent website based on blockchain. They had a really great paper that I wish I downloaded in June because they went and did it. Probably had too much truth in it. But they do have their own website. And love them or hate them, they're really smart people. And as a side, sorry, we have an open house at the Fab Lab, which is probably looks that way right now.
Okay.
So you get crypto people, 3D printing, all that.
Okay. Thank you.
Okay, thank you, everybody. Come back next week with our which will talk to us about the future of lighting. I would love to have the ESC people down here for a selfie for our website. And if you leave a survey for me on the table, please take the cookies. If there are any cookies left over here and I have to eat them all, I'll do it. And it will be terrible.
He's already went.
Are you familiar with this name? Mensa? Mensa is from, yeah, I mean, Mensas are from Ghana. Yeah. Oh, he's from Ghana? Yes. Okay. Okay. Can I have one of yours? I don't think I have one on me, but I can. He left and then came back.
You gotta go see your girlfriend.
I'm going to Poland.
I work in our economic development. I'm not sure.
Yes.
Sure. You know what? You registered on my RSVP, so I already have it.
Sure. I would love to.
Thank you. Thank
So
you.
your
Thank you so much.
personal, okay, you can write down.
I can, yes,
Yeah.
let me get it. Thank you.
So where you work now? Now here in Lehigh? Or?
I'm at Lehigh, but I'm leaving.
Because I would give it to you. I would give it to you so much.
I'm starting a job at NREL in about a month.
Oh, I see.
Yeah, so I'll be in Colorado, Golden.
So which area? Where?
Golden.
Golden?
Yes.
Yeah, I know that.